Today I'm diving into an often overlooked but really powerful tax strategy, the accountable plan. And if you have ever paid for a business expense out of your own pocket, maybe phone bills, travel, home office costs, whatever it might be, and wondered, can I get reimbursed without getting taxed? This is for you. Here's the hook. When done right, an accountable plan lets you or your employees get reimbursed without that money being treated as taxable income. But mess it up, and the IRS can reclassify those reimbursements as wages, meaning extra income tax and payroll tax. Today I'm going to walk through what exactly an accountable plan is, why it matters, and what you avoid by doing it correctly. I'm going to talk about how to implement one step by step, and also talk about common pitfalls, audit red flags, and things you need to watch out for. By the end, you'll know whether you need one, how to get set up correctly, and how to use it safely in your business. Let's dive into it. So the first thing I want to talk about is, what is an accountable plan? Because it can be complicated. Let's break it down in easy to understand steps. An accountable plan is simply a fancy word for a reimbursement policy. It's a way to reimburse yourself where it's tax-free income to you, business expense. You get a business expense and it's tax-free income to you. This is a reimbursement for items that are maybe business and personal mixed, or maybe you have a business expense you accidentally paid for personally. This is a way to get that business deduction for those items that you paid for personally. A properly set up accountable plan, again, will give you that opportunity to get a reimbursement for business expense and not taxable to you. And why is an accountable plan so important? Why does every business need one, especially for those S-Corp owners? Because without a properly set up plan, it's taxable to the employee and potentially you as the owner. So if you are just reimbursing for a home office or reimbursing for cell phone and internet costs, if you don't have a properly set up plan, that could be taxable to the recipient, whether that's you or whether that's your employees. And so it's super important that we have an accountable plan set up. So who needs one and when does it apply? Accountable plans, generally stating, when we're talking about the owner of the business, we're mainly talking about S-Corps and C-Corps, since you are considered employees of the company. If you're set up as a sole proprietorship, you're just going to take these deductions directly on your Schedule C when you're filing your taxes. But if you're set up as an S-Corp or a C-Corp and you're reimbursing yourself for items that you paid for personally that are business related or have some business related cost to them, and you're reimbursing for that, you need to have a properly set up an accountable plan. The other situation when accountable plans are required is if you're reimbursing employees for expenses that maybe they paid for that are business related. Maybe your employees travel, they pay for everything personally, and then you reimburse them for that. You need to have a properly set up accountable plan to make sure that reimbursement doesn't become taxable income to you. So if you are just reimbursing the owner of the business, we need an accountable plan if you're an S or a C Corp. If you're a sole prop, we don't need an accountable plan for reimbursements to the owner. You're just going to take those deductions on your Schedule C. But if you're reimbursing employees, whether you're an S Corp, a C Corp, a partnership, a sole proprietorship, whatever it is, if you're reimbursing employees, you need to have a properly set up accountable plan. All right, let's take a moment. If you're running a business and want to stop guessing about taxes, we've put together a free resource to help. It's called the Tax Savings Starter Kit. You'll get our complete business deduction list, you'll get real-world case studies of $5,000 to $25,000 in tax savings, and you'll get a complimentary discovery call with our expert team. Head to taxsavingspodcast.com/starter kit to download it. One more time, that's taxsavingspodcast.com/starter kit. All right, let's jump back into it. So when we talk about an accountable plan, I want to talk about how do we implement it? What are the steps to make sure that we're doing this correctly? Because with any tax strategy that we ever discuss, one of the important pieces is correct implementation. You might have what you consider an accountable plan put into place, but if you don't implement it correctly, it could come back to bite you. Let's talk about those steps. What do you need to do to ensure it? The biggest thing that we recommend is having a written plan and proper reimbursement. So let's talk about the first one, a written plan. You know, tax rules do not require you to have a written accountable plan in place. However, we always recommend it as it makes it clear to both you and your employees, if you're reimbursing employees, and in the event of an audit, it helps you make your case that much easier. You have a formalized accountable plan in place. Having that written plan is really important. Now, when we talk about a proper accountable plan, there are four main parts to the plan. The first one is business connection. The expenses that you're reimbursing must be a valid business expense that occurs in the normal course of the business, just as if you were to run it through the business. So we can't be reimbursing for things that aren't business related and hopefully getting a business deduction for it. They still need, just like any other business expense, it needs to be a valid business deduction. The second piece is substantiation. employees, or you as the owner, need to submit the required proof of a particular expense. Think of it as like an expense report, maybe a trip sheet to say, here's the mileage, here's the stops we made, or maybe it's just a receipt that shows what you spent the money on. A receipt or any kind of other documentation should include things like the amount, the business purpose, the date and time, a description of what was purchased. I always say write on receipts the who, what, where, when, why. Write on the receipts who you were with, what was purchased, why is it a business related item. Write that in the receipts, and that's going to be your proof. So any reimbursement still needs substantiation. The third piece is no excess payment. So if there are any advances or excess reimbursements made, that must be returned to the business, or it needs to be recorded as taxable wages. So let's give an example. Let's say you have an employee that's going on a business trip, or you as a business trip, and you say, well, I'm going to pre-reimburse them money so they have money to spend on meals. And let's say you say, I'm going to send them $300 to cover meals and business expenses on this trip. And let's say that they go on this trip, they come back, and they give you receipts, and it adds up to $200. So you gave them $300, they gave you receipts for $200. That means that your initial reimbursement was $100 too much. They either need to return that $100 to you, or it needs to be added in as taxable wages. So we can't make excess payments. Or if someone gives you a receipt for a $70 gas ticket, we can't give them $100. Or if we do, 30 of that has to be considered taxable wages. The 4 P's that's important in an accountable plan is timeliness. The reimbursements and that substantiation have to be submitted in a timely fashion. We recommend doing this monthly. So to have a monthly reoccurrence that you're doing these types of reports and making those reimbursements. So when we talk about properly setting up an accountable plan, what are the steps? Number 1, and this is our recommendation, is we adopt a written reimbursement policy. A written reimbursement policy, aka your accountable plan. Again, it's not required by the IRS, but it helps defend it if you were ever to get asked about it. We have a sample of this in TaxHelm that you can just download, fill in your information, and be on your way with it. The second step is to create an accountable plan template or an expense report. And this is what people are going to submit to get that reimbursement that proves what you're reimbursing for and why it's a business expense. So it's an expense report, or what we call an accountable plan template. Again, we have a sample of this in TaxHelm that makes it super easy to record a lot of these regular expenses that show up on an accountable plan. And the third one, and this one might seem obvious, but you need to make the reimbursement payment. You're going to make a reimbursement payment from the business account to the personal account. And that's the setup of an accountable plan. Number 1, adopt a written reimbursement policy, aka your accountable plan, create an accountable plan template or an expense report, and then make the reimbursement. That's how we properly set up an accountable plan. We have samples for all of those directly within TaxHelm. Now let's talk about some of the common types of expenses that we see on an accountable plan. And this is important because these are the items that are going to give those opportunities for you to create business expenses out of some of these items. The first one, and this is the biggest one that we often see, is a home office deduction. Now, home office is typically something that majority of those expenses for that home office are personal expenses. You're living in that place. But a portion of those expenses can be a business deduction. And since you're paying for these items personally, the proper way to get a business deduction for that home office, especially when you're set up as an S-Corporation or a C-Corporation, is to use an accountable plan to reimburse yourself for the business use of that home office. The other one would be automobile expenses. If you have an automobile that's owned by the individual, not the business, owned by the individual, to properly get a business deduction for any automobile expenses, whether you're using the mileage method or the actual method, you need to have an accountable plan in place, and you're reimbursing for the business use of that personal automobile. We often see things like office expenses. Maybe it's paper, cords, charging stuff, all those types of things. Travel, whether you're doing an actual travel reimbursement or per diem, travel is oftentimes on an accountable plan. Parking and tolls obviously go along with that. Business meals. A lot of times, and I had a case like this just recently, went to lunch with a friend, talked business the whole time, swiped my personal card, was like, oh, that was a business expense. I'm going to add that to my accountable plan. So business meals are an opportunity for that. Maybe there's tools and equipment that you're paying for personally. Maybe it's tools and equipment that you're using mostly personal, but some business. There's an opportunity for that. Dues and subscriptions, cell phone and internet. Obviously, cell phone and internet, especially if you're working from home, have a lot of business use, but it's not 100% necessarily. So maybe you're just using an accountable plan to reimburse for the business use percentage of those items. That's a lot of what we see wrapped up into an accountable plan. Now, when we talk about an accountable plan, there's some things that you need to watch out for. First off, as with any tax strategy, you need to dot your I's and cross your T's. Properly set up this plan. I know I said earlier, it's not required to have a formal document, but just do it. It's easy to download one, fill in a few things, have it on file. If you get a knock from the IRS, the last thing you want to do is to try to prove all this when you can just show them a document that says, here is our accountable plan. That makes it so much easier and audit-proofs the strategy. The next thing you need is proof. You need full proof of the business expenses. So if you're getting reimbursed for home office, or if you're getting reimbursed for travel, if you're getting reimbursed for meals, make sure you have the receipts and proof that make up an account for that reimbursement amount. And then you need to actually make the reimbursement, moving money from the business account to the personal account for that reimbursement. The last thing that we want is a reimbursement to be taxable to you or your employees. That's the last thing we want, and that's why we just need to make sure we set up an accountable plan properly. If you are organized as an S or a C corporation, you need to have an accountable plan in place, because every one of you, 99% of you, should be using home office in some sort of automobile expense, and you cannot properly get a home office deduction with an S corporation without an accountable plan set up in place. So make sure you just do the work, put that time in, put that effort in, get that reimbursement going so it's not taxable to you, it's a business expense, and it's not taxable to you. All right, so let's recap the accountable plan. An accountable plan is essentially a formal reimbursement policy that allows your business to reimburse you or your employees for business expenses without those reimbursements becoming taxable. Now, of course, if you have 100% business related expenses, just run them through the business. Don't worry about an accountable plan. An accountable plan is specifically for those items that are business and personal mix. You're getting a reimbursement for the business portion of them. Or if you accidentally paid for a business item using your personal card, here's a way to get that reimbursement done for it. Now, the key requirements when we're talking about an accountable plan is 1, a business connection, 2, proper substantiation, receipts, dates, purposes, business reason for these expenses. Number 3 is no excess reimbursements. Any overpayment has to be returned or it's going to be considered taxable income. And number 4, timeliness of reporting. We recommend sending in your expense reports and making those reimbursements on a monthly basis. And again, within TaxHound, we have documentation to help you along this entire process. It's especially important when you're operating as an S corporation or a C corporation, because you're treated as an employee of the business. And finally, you should put it in writing. Even though the IRS doesn't technically require a written plan, do it. Maintain good documentation and follow the rules strictly, or if you don't, risk having reimbursements reclassified as wages with tax consequences. So there you have it. This is an extremely important tool that if you haven't implemented yet, it is something you want to get on your checklist right away. In TaxHound, we have sample templates, a checklist, and audit proofing tips to show you that you don't have to do this from scratch. If you want help from our team of tax professionals implementing this strategy, along with so many other tax strategies, go visit taxhelm.com, that's TAXELM.com, or click the link in the description for a free discovery call. We are helping people like you legally lower your tax bill every single day. If you found this helpful, don't forget to hit subscribe, hit that like button, and share it with a business owner who's sick of paying too much in tax. Thanks for stopping by, and I'll see you on the next one.